General risk disclosure. Trading financial instruments, including forex, futures, equities, commodities, and cryptocurrencies, involves significant risk of loss. Trading is not suitable for all investors, as it may result in the loss of your entire investment. Leverage, volatility, and liquidity risks are inherent in these markets. Before engaging in trading, carefully consider your financial situation, experience level, and risk tolerance. You should only invest money you can afford to lose. Forex and futures disclaimer. Trading in the forex and futures markets is highly speculative and carries a substantial risk of loss. The leverage nature of these instruments amplifies gains and losses, potentially leading to substantial financial exposure. This content complies with CFTC Rule 4.41. CFTC Rule 4.41 disclaimer. Hypothetical or simulated performance results have certain inherent limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors, such as lack of liquidity. Simulated trading programs are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Equities and commodities disclaimer. Equity and commodity trading involves risks associated with market volatility, company-specific factors, and geopolitical events. While stocks and commodities may have a lower leverage factor compared to forex or futures, they can still result in substantial financial losses. Cryptocurrency disclaimer. Cryptocurrencies are speculative and highly volatile instruments. Trading cryptocurrencies involves additional risks, including regulatory uncertainties, security vulnerabilities, and lack of liquidity. Cryptocurrencies are not regulated by most governments or central banks, and their value may be affected by external factors such as news events and market sentiment. Regulatory references. In the United States, this content adheres to the regulatory standards of the Commodity Futures Trading Commission, National Futures Association, and Securities and Exchange Commission. In the European Union, trading practices comply with the European Securities and Markets Authority standards. Global compliance, content aligns with internationally accepted guidelines, but laws vary by jurisdiction. Consult with a licensed professional in your area. Past performance disclaimer. Past performance is not indicative of future results. Any historical results or performance shown in this content are for informational purposes only and do not guarantee future performance. Educational content disclaimer. The information provided in this video is for educational and informational purposes only. It is not intended as investment advice, nor should it be construed as a recommendation to buy, sell, or hold any financial instrument. Always consult with a licensed financial advisor or regulatory authority in your jurisdiction before engaging in trading activities.
All right, let's do the work. So it's week 4. This week is August 24th through the 28th. Top stories, we got UJ. It's almost back to 160. Looks like they got to do another intervention to save the yen. Walmart stock crashes 9% as fuel shock hits America's shopping cart. Got a little inflation scare. Walmart's in the Dow, so it makes sense for that to drop. Bitcoin jumps 8%. Treasury move unlocks risk appetite. Yeah. See, look, gold jumps 3%. So everybody's gonna be looking at Bessent this week, and he talk on Monday at 2 p.m. We're gonna see if you're gonna keep this rally going. PCE, GDP Wednesday, Jackson Hole and Wash on Friday. Jackson Hole actually starts. What's this? Thursday. And we got CPI. Interesting. There isn't much major U.S. economic data scheduled Monday, so Bessent's speech could be the main market-moving event of the day. Last week, Treasury's decision to increase its purchases of long-term bonds pushed yields lower, weakened the dollar, helped kicking off a strong move in gold. What I'm watching, does Bessent say anything further? Treasury buybacks, lowering long-term yields, or managing the bond market? His comments could set the tone for Treasury yields, the dollar, and gold going into the rest of the week. I call Bessent's Monday anchor rather than necessarily the whole week's anchor, because Wednesday core PCE and GDP, especially Wash and Jackson Hole Friday, can become much larger repricing events later in the week. Going to COT, S&P. Bottom line, the commercials are bearish, but they're improving. The large specs are mildly bearish. The small traders are strongly bullish, which is contrarian caution. The Wilco style reads around -4% open interest, not extremely bullish commercial setup. Likely behavior is consolidation, fail rally risk with downside reversal potential if price weakens and seasonal pressure aligns. We do got a little bit of midterm. Just a snapshot. My bias for the S&P is bullish. You can go to NASDAQ COT. Bottom line, commercial slightly net short, but sharper, more bearish week over week. Large specs slightly net short, but improvement. Small traders net long, contrarian caution. Wilco style read about -1.9% of open interest, not extreme, but the weekly commercial flip is negative. Likely behavior consolidation, fail rally risk with downside reversal potential if price confirms weakness. And my bias is bullish. I'm actually more bullish on this because last week we had a big sell position on the COT and that got closed out. So I'm looking to see more bullish side. Here go gold. The bottom line commercials, they're bearish. That's because they selling the gold. Managed money bullish. Other reporters bullish. Small traders bullish. Real Coast Style read. Direct commercials -7% of open interest. Broader commercial side -63% of open interest. So we got a crowded long consolidation or reversal risk unless price confirms a strong upside breakout despite commercial selling. Commercial selling to make money. We're not really looking at dividends to control the price. And our bias is bullish, strong bullish. I don't think it's as strong as last week position, but it's still overall bullish. And oil, we got producer merchant bullish, swap dealers bearish, managed money bullish, reportables bullish, small traders bullish, real close style read, physical commercials own 16.7% of open interest, but broader commercial swap side is -8%. Consolidation with bullish breakout potential pending price confirmation. Seasonality is kind of lining up with this too. Oil's supposed to have that seasonal run, and it did flip from bearish to bullish. So oil flipped, oil flipped, and Nasdaq flipped. So we bullish for oil. Let me check this chart too. I think that was this one up too. Euro's gonna be interesting as well. Can't trade everything though. You want a Fed watch? We're sitting here at no change. Even with all the news that's coming out, they're not really looking at a hike. So maybe watch the right thing by not hiking rates. People were saying it could have been political. Here we go. Earnings this week. Wednesday, Nvidia. Thursday, Marvell. We got Salesforce and CrowdStrike, but Nvidia's going to take all the attention. Marvell has a little better chance of getting attention. It's a hot stock right now, and it's the only thing worth looking at for Thursday. Look at the sentiment. Bearish is coming around 40, so you're going to see a little pushback. These 40s, we usually see our pushback. When this gets closer to 40, you'll see bearish step in. Kind of like range of market. We haven't really been one-sided. Go here. Top 5 market moving headlines. Washington prepares its toughest Iran sanctions yet. Treasury Secretary Scott Bessent says Washington will unveil an unprecedented sanction campaign against Iran, including pressures on countries that continue buying Iranian oil or facilitating trade. The administration says that the economic pressure strategy is intended to avoid larger military escalation. Institutional read. Monday's Bessent update is a direct oil inflation event. The market would care most about whether sanctions meaningfully tighten Iranian exports or provoke retaliation around Hormuz. So it's going to be a big week. It's a big deal. So number 2, long treasury yields remain equities market biggest structural problem. The 10-year treasury ended Friday around 4.7. That's bad. The 30-year around 5. Nobody cares about the 30-year. We look at the 10. Despite Treasury expanded loan bond buyback program, investors remain concerned about fiscal supply, inflation risk, and rising financial needs. So institutional read this number 1 filter for NASDAQ this week. If we get below 4.6, it's relief. 4.7 is restrictive. 4.75 and above, sell everything. Number 3, Nvidia earnings become the biggest single stock catalyst of the week. NVIDIA reports after Wednesday close, consistent cited in the week ahead calendars, roughly 92 billion in revenue and $2 earnings per share, with investors focused on AI demand, hyperscaler spending, gross margin, and forward guidance. And I expect them to beat. They always beat, then they always sell. NVIDIA is more important than just NVIDIA. It is the referendum on whether the AI spending cycle can justify the enormous capital commitments and debt insurance supply and data center build-outs. Man, I need some water after that. Here we go. Gold and Bitcoin surged together. Gold surged towards 4.6, while Bitcoin broke above the 77 during the weekend after touching roughly 79 on Friday. Both benefited from a weaker dollar, treasury market concerns, and demand for scarce assets. Yeah, it's because of Besson. And number five, PCE Jackson Hole create major macro decision window. This week ahead includes PCE GDP, which we're gonna be trying to predict, or Wash predicts. Jackson Hole. Here we go. Look at market breadth. Materials are doing good. Healthcare is doing good. Financial is doing good. I'm really waiting on this tech. Tech rally. It's over. So go tech right here. Bullish for the week. I think the anchor stays here. Week one. I don't think we go all the way down here. Well, shoot. With Besson talking about Iran, we could. We gotta be 50-50. We got to see when we open up. Before we just plan out the whole week. I expect bounces though. Rebalance it. I graded this range, and so these are the rays I'm looking at that matched the graded levels for chain of custody. Notes: the CLT flip bullish for Nasdaq. Anchor point interaction. I expect week one to hold. Story to price alignment. We rebalance for week three. Let's see if we find a base to build from. Plan on engaging. S&P. We got cleaner PA. More breath. We just seen all those sectors, healthcare, financials, all that stuff is doing good. So we can expect some good price action here. I expect this week one low to hold. We do got midterms coming up, but they're strategically doing everything. Everything bad is scheduled for after the midterms. How many people? You guys, they pretty smart. XAU, the gold. We had that crazy rally. Kiss that 200 goodbye. If we come down here, this is 44, 40. Just internal range liquidity, I can see a good buy up. I'm looking to buy retracements. We're not flipping on gold, especially with the seasonality, how it is. So Besant remarks on gold and Bitcoin taking off. Anchor point. The anchor really started August. We started that run. Seasonality matches for this run. So seasonally, we're supposed to run Besant or Besant, however you pronounce it. It's pushing us even farther. Skill focus is price delivery, trade location, and time of entry. I want to start getting my entries in those macro windows. Precision. It's good for risk. Journaling intent, better execution journals. I want to get that time down. Case study hint plan, macro times, and graded levels. So I already been kind of studying that. Weekly risk, we're doing 1%. I want to get in the groove before I commit to just upping the risk. Wednesday is the strike day. We got NVIDIA reported. So maybe Wednesday, maybe reversal. Okay, that's all the work. All right, peace.